Before we dive in, a quick but important legal note. This video is for educational and informational purposes only. I am not a licensed financial advisor or insurance agent. The information presented here reflects my own research and analysis and should not be taken as financial, legal, or insurance advice. Insurance policies are complex, and rates can vary dramatically based on your personal circumstances. Always consult with a qualified professional and read the policy documents carefully before making any decisions. Your financial situation is unique, and you are responsible for your own choices. USAA. The name itself feels like a promise, an exclusive club for the brave men and women who serve our country and their families. For decades, they've built a brand synonymous with trust, loyalty, and unbeatable service. They are consistently ranked at the top of every customer satisfaction survey. Their members are fiercely loyal, almost evangelistic. So asking if USAA is a good fit sounds like a ridiculous question, right? It's like asking if water is wet. For anyone connected to the military, it's supposed to be the obvious choice, the default, the no-brainer. But what if I told you that for a significant number of military families, that no-brainer decision could be a multi-thousand-dollar mistake? What if that legendary customer service has some serious cracks appearing in its foundation? And what if the very thing that makes USAA so exclusive is also its greatest weakness, leaving some of its own members in the lurch when they need it most? That's not something you'll read in a J.D. Power report. It's not something you'll hear in their commercials filled with soaring eagles and proud service members. But it's the reality we're going to uncover today. We are going to strip away the marketing, the reputation, and the nostalgia to give you a brutally honest, data-driven look at USAA auto insurance in the year 2024. This isn't a hit piece, and it's not a sponsored ad. This is a comprehensive guide to help you answer one critical question. Is USAA really the best choice for you and your family? By the end of this deep dive, you will know exactly where USAA shines and where it stumbles. You'll understand their pricing strategy, how to get every discount you're entitled to, what their claims process is actually like from real members, and most importantly, you'll be able to confidently decide if you should switch to them, stick with them, or run for the hills to a competitor like Geico or Progressive. We're going to save you time, we're going to save you headaches, and we are almost certainly going to save you money. So let's start at the very beginning. Before we can talk about price or coverage or claims, we have to talk about the velvet rope, the gatekeeper. We have to answer the first and most important question. Can you even get in? USAA stands for the United Services Automobile Association. It wasn't founded as a typical insurance company. It was started in 1922 by a group of 25 Army officers who couldn't get car insurance because, as military personnel, they were considered a high-risk group. It was a club, an association created by service members for service members. And that spirit of exclusivity is baked into its DNA. Unlike Geico or Progressive, you can't just go to their website and get a policy. You have to be eligible. You have to be part of the family. So who exactly is in the family? Let's break it down because the rules are more specific, and in some cases more generous than you might think. The first and most obvious group is current military members. If you are currently serving on active duty in the National Guard, or in the reserves in any of the 5 branches Army, Navy, Air Force, Marines, or Coast Guard, you are in. Simple as that. You are the core of their membership. Next up, veterans. This is where we see the first bit of fine print. USAA is open to those who have retired or separated from the military with an honorable discharge. The key word there is honorable. If you received a general discharge, an other than honorable, a bad conduct, or a dishonorable discharge, you will likely not be eligible for membership. This is a hard line for them, and it all goes back to that idea of an association built on a specific code of conduct. So, if you're a veteran, you'll need your DD-214 or other separation documents handy to prove that honorable discharge. Now let's talk about the future of our military officer candidates. If you are a cadet or midshipman at one of the U.S. service academies, or if you're in an advanced ROTC or officer candidate school program, you're also eligible. USAA wants to bring you into the fold early, and this is their way of doing it. Okay, that covers the service members themselves, but USAA is a family affair, so let's talk about the family. This is where eligibility gets really interesting and where a lot of people either mistakenly think they can't join, or don't realize they can. Let's start with spouses. If your husband or wife is a USAA member, you are eligible. This includes legally recognized domestic partners in some states. Once you're in as a spouse, you are a full member for life with your own USAA number. Your membership is not dependent on your spouse keeping theirs. But what about after the marriage ends? This brings us to widows and widowers. If your late spouse was a USAA member, you remain eligible. You don't lose your membership or your ability to join just because they have passed away. Now for the one that trips everyone up, former spouses. Let's say you were married to a service member, you joined USAA during the marriage, and then you get divorced. Can you keep your USAA membership? The answer is yes, with a couple of very important conditions. First, you must have joined USAA while you were married. If you waited until after the divorce was final, it's too late. Second, you cannot have remarried. Once you remarry a non-USAA member, your eligibility as a former spouse ends. But as long as you join during the marriage and remain unmarried, you are a member for life, even if your ex-spouse drops their own USAA coverage. This is a huge point of confusion, and it means there are a lot of ex-spouses out there who are eligible and don't even know it. Finally, we get to the most powerful part of USAA eligibility. It's hereditary. Passes down through generations. This is where the family tree really matters. We're talking about children and stepchildren. If either of your parents is or was a USAA member, you are eligible. It's that simple. And here is the single most important secret about USAA eligibility that most people miss. Your parent did not have to be an active member for you to be eligible. They only had to be eligible themselves. Let me say that again because it's a game changer. Let's say your dad served in Vietnam, got an honorable discharge, but he never once used USAA. He had Geico his whole life. Because he was eligible, you, his child, are also eligible. All you need to do is prove his service and honorable discharge. This means millions of Americans whose parents or grandparents served are walking around with a golden ticket to USAA and have no idea. This eligibility flows down to stepchildren as well. If your stepparent is a member and they join USAA before you turn 26 and while they are still married to your biological parent, you can become a member. So let's recap who can get in: active duty, guard and reserve, honorably discharged veterans, cadets and midshipmen, spouses, widows, and certain unmarried former spouses. And finally, children and stepchildren of eligible members. Now, just as important is who is not eligible. And this can cause some real frustration. Parents of service members cannot join. If your son or daughter is in the Army, you can be proud, but you can't get USAA through them. It only flows down, not up. Siblings are also not eligible. Neither are grandchildren, unless one of their own parents was eligible through the grandparent. It has to be a direct parent-child link. And of course, non-married partners or fiancés are not eligible. Understanding these rules is the first crucial step. It's the difference between wasting your time on a quote you can never get and unlocking access to what could be the best insurance of your life. Before you do anything else, you need to trace your family's military history. Talk to your parents. Find those old service records. Because you might be holding the key to membership without even knowing it. And once you find that key, you unlock the door to what is, without a doubt, USA's single greatest strength. It's the reason people who have it almost never leave. It's not their prices, it's not their app, it's not even their commercials. It's their customer service. Now I know what you're thinking. Customer service? That's it. Every company on the planet claims to have great customer service. It's the most overused, meaningless marketing phrase in existence. Your cable company says they have great customer service right before they put you on hold for 45 minutes to the sound of distorted elevator music. So when I say USAA's customer service is legendary, I want you to understand that I'm not using that word lightly. We're talking about a level of service so consistently excellent that for decades, it has been the gold standard by which all other insurance companies are judged. To understand why, you have to understand what USAA actually is. And this is critical. USAA is not a normal company. It is not publicly traded on the stock market. There are no Wall Street investors demanding bigger profits every quarter. USAA is a member-owned insurance exchange. That sounds complicated, but the concept is beautifully simple. When you become a member and buy a policy, you are not just a customer. You are a part owner. The company is owned by and exists solely for its members. Think about that for a second. The people paying the premiums are the owners. This completely changes the entire dynamic. A typical insurance company has a fundamental conflict of interest. They have a duty to their shareholders to maximize profit, which often means paying out as little as possible in claims. But USAA's only duty is to its members. Their goal isn't to make a profit for some anonymous investor in New York. Their goal is to provide the best possible service and value to the military families who own the company. This isn't some marketing gimmick. It is baked into their very corporate structure. It's the secret sauce. It's the reason why, when you call them, you feel like you're talking to a human being who is actually on your side. Let me give you a real-world example of what this means. There's a story about a young army captain deployed to Afghanistan. While he's overseas, his wife, who's back at Fort Bragg with their 2 small kids, gets into a serious car accident. Someone runs a red light and T-bones her minivan. The van is totaled, she's shaken up but thankfully okay, but the kids are terrified. She's alone, her husband is thousands of miles away in a war zone, and now she has no way to get her kids to school or go to the grocery store. She calls USAA, probably in tears, expecting a nightmare of paperwork, adjusters, and arguments. But that's not what happened. The USAA representative on the phone didn't start with policy numbers or deductibles. The first words out of her mouth were, "Ma'am, are you and your children safe?" She calmed the wife down, walked her through the immediate steps, and then did something extraordinary. She said, "Don't worry about a thing. We're going to overnight you the check for the full value of your vehicle. And I've already arranged for a rental, a full-size SUV, to be delivered to your house in the next 2 hours. It's yours for as long as you need it." They didn't wait for the police report to be finalized. They didn't haggle over the value of the minivan. They saw a member of their community in crisis, and their first and only instinct was to help. They solved her problem first and dealt with the paperwork later. That's the difference. That's what it means when your insurance company is also your partner. And these stories aren't rare. They are the norm. Talk to any long-term USAA member, and they will have a story just like this one. Whether it's a hurricane, a wildfire, or a simple fender bender, the response is consistently the same. Empathy, speed, and a genuine desire to make a terrible situation better. This isn't just anecdotal evidence either. The numbers back it up in a staggering way. For years, the most respected name in customer satisfaction ratings has been J.D. Power. They conduct massive independent surveys across every industry. In the world of auto insurance, winning a J.D. Power award is like winning an Oscar. Most companies are thrilled to win it for a single region just once. USAA has so consistently dominated the J.D. Power ratings, year after year in every single region of the country, that in 2016 J.D. Power had to fundamentally change their rules. They essentially disqualified USAA from winning the awards, because it was no longer a fair competition. They still rank USAA, and it still scores higher than everyone else, but they list it separately as an award ineligible brand simply because its membership is restricted. Think about that. They were so much better than the competition for so long that they broke the grading curve for the entire industry. Their Net Promoter Score, which is a measure of how likely customers are to recommend a company, is consistently in the high 70s or low 80s. To put that in perspective, the average for the insurance industry is around 40. A score above 70 is considered world-class and is on par with beloved brands like Apple and Amazon. People don't just use USAA. They become lifelong evangelists for it. So the service is incredible. It's built on a foundation of member ownership, proven by countless stories, and backed by undeniable data. It sounds perfect, right? Well, this is an honest overview, so we have to address the other side of the coin. If you're expecting USAA to always 100% of the time be the absolute cheapest option on the market, you might be disappointed. Because that's not their game. They are not trying to be the Geico or Progressive of the world, fighting to offer the rock-bottom bare-bones price. Their goal is to provide the best value, not the lowest price. Value is a combination of price, coverage, and service. And USAA puts a heavy emphasis on the service and coverage part of that equation. Sometimes that means their premium might be a little higher than a quote you get from a competitor who might cut corners on service or offer less robust coverage. For millions of members, paying a little bit more for the peace of mind that comes with knowing USAA will have their back in a crisis is a trade-off they are more than willing to make. They see it not as an expense but as an investment in security. But for some people, especially those on a very tight budget where every single dollar counts, that price difference can be a deciding factor. You might find a cheaper quote elsewhere. It's certainly possible. But what you are unlikely to find, what is nearly impossible to find, is a company that will treat you better when things go wrong. And that brings us to the core of the insurance product itself. Okay, the service is top tier, we've established that. But what are you actually buying? What does a USAA auto policy actually cover? Are there special perks or features built in for military members that you can't get anywhere else? Because a great call center experience doesn't mean much if the policy itself is full of holes and exclusions. We need to peel back the layers and look at the fine print. We need to analyze the actual coverages, from liability and collision to the unique add-ons and discounts that make USAA, well, USAA. That's where we're going next. Let's start with the absolute bedrock of any auto insurance policy: liability. This isn't the exciting part, it's not the part with cool perks, but it's the single most important coverage you will ever buy. Because it's not about protecting your car. It's about protecting your entire financial future. Every state, except for a couple with weird rules, legally requires you to have it. But the state minimum is a joke. It's a financial landmine waiting to go off. Imagine this. You're driving home, you're a little tired, and for a split second you glance at your phone. In that second, the car in front of you slams on its brakes. You rear-end them. It's not a huge crash, just a fender bender. But the driver of the other car is a surgeon. The jolt gives him a severe case of whiplash and some nerve damage in his hand. He can't operate for 6 months. His car, a brand new luxury SUV, needs $20,000 in repairs. Suddenly, you're not just on the hook for a bumper. You're on the hook for his 6 months of lost income. We're talking hundreds of thousands of dollars, plus his medical bills, physical therapy, and the repairs to his vehicle. Now, let's say you only have the state minimum liability coverage. In many states, that's something like 25/50/25. That means your insurance will pay a maximum of $25,000 for bodily injury to one person, a maximum of $50,000 for bodily injury for the whole accident, and $25,000 for property damage. So, in our surgeon scenario, your policy pays out $25,000 for his medical bills and $25,000 for his car. That's $50,000 total. But the bill is over $400,000. Who pays the other $350,000? You do. They will come after your savings. They will come after your house. They will garnish your wages for decades. That 1 second of distraction could financially cripple you for the rest of your life. This is why liability coverage is your shield. It stands between you and financial catastrophe. And this is an area where USAA's guidance, in my experience, is generally very responsible. When you get a quote, they don't default to the pathetic state minimums. They typically recommend much higher limits, like 100/300/100 or even more. They understand that their members, many of whom are officers or established professionals, have assets to protect. So when you're looking at your USAA quote and see those higher numbers for bodily injury and property damage liability, don't just slash them to the minimum to save $50 a month. You're not saving money. You're gambling with your entire net worth. You're taking off your shield before walking into battle. Okay, so that's liability. Protects everyone else from you. But what about protecting you and your car? That's where the next two pieces of the armor come in: collision and comprehensive. Let's start with collision. It's exactly what it sounds like. It covers damage to your car when you collide with something, whether it's another car or an object like a light pole, a guardrail, or the side of your own garage. Don't lie, we've all been there. The key thing to remember about collision is that it typically pays out when you are at fault. If someone else runs a red light and T-bones you, their liability insurance is supposed to pay for your car. But if you are the one who slides on some ice and hits a tree, that's on you. And without collision coverage, you're paying for those repairs or a whole new car out of your own pocket. This is also where the concept of a deductible comes into play. A deductible is simply the amount of money you agreed to pay first, before the insurance company starts paying. So if you have a $1,000 deductible and you have $7,000 in damage, you pay the first $1,000, and USAA pays the remaining $6,000. The higher your deductible, the lower your monthly premium will be. It's a trade-off. You're taking on a little more of the immediate risk in exchange for long-term savings. A common strategy is to choose the highest deductible you can comfortably afford to pay out of pocket at a moment's notice. If you have a $2,000 emergency fund, a $2,000 deductible might be a terrible idea. But a $500 or $1,000 deductible could be the sweet spot. Now for the third piece of our core protection: comprehensive coverage. This is sometimes called other than collision coverage, and it's for all the weird, random, non-driving stuff that can happen to your car. Think of it as your protection against chaos and bad luck. A massive hailstorm rolls through and turns your hood into a golf ball? That's comprehensive. A deer decides to play chicken with you on a back road at night? Comprehensive. A tree branch snaps in a windstorm and crushes your roof? Comprehensive. What about theft? If you walk outside and your car is just gone? Comprehensive. Vandalism, fire, flooding. It's all covered by comprehensive. For a lot of people, this coverage seems optional. They think, I'm a safe driver, I park in a good neighborhood. But you can't control the weather, and you can't control animals or desperate criminals. If you have a loan on your car or you're leasing it, the lender will almost certainly require you to have both collision and comprehensive. They have a financial stake in that vehicle, and they want to make sure their asset is protected. But even if you own your car outright, ask yourself this simple question. If your car were totaled tomorrow by something completely out of your control, could you afford to go out and buy another one just like it with cash? If the answer is no, you need comprehensive coverage. So these three, liability, collision, and comprehensive, are the holy trinity of auto insurance. They form the foundation. Liability protects your assets from others. Collision protects your car from your own mistakes. And comprehensive protects your car from the world at large. Pretty much every insurance company offers these. The difference lies in the price, the service, and how they handle the claims when you actually need to use them. But this is just the beginning. This is the standard package. The real question, and what separates a basic policy from a great one, is what comes next. What are the unique enhancements, the special features, the little add-ons that can be absolute lifesavers? This is where we get into things like rental reimbursement, roadside assistance, and the one that everyone asks about, accident forgiveness. Does USAA's version of these benefits actually live up to the hype? Are they worth the extra cost? Or are they just clever marketing designed to make you feel safe while offering very little in return? That's the next layer we need to peel back. Let's start with the one that feels like a safety net for every driver: roadside assistance. On paper, it's a no-brainer. For just a few extra dollars a month, USAA promises to be your knight in shining armor if you get a flat tire, run out of gas, lock your keys in the car, or need a tow. The marketing paints a picture of a seamless, stress-free rescue. You make one call and help is on the way. It's the kind of peace of mind you can't put a price on. Or can you? Here's the first critical thing to understand. USAA is not a roadside assistance company. They don't have a fleet of branded tow trucks patrolling the highways. Like almost every other insurance provider, they contract this service out to a third-party network of local tow companies and locksmiths. This isn't necessarily a bad thing, but it's where the pristine image can start to get muddy. Your experience isn't really with USAA in that moment of crisis. It's with A&B towing in a town you've never heard of. So what does this mean for you? Stranded on the shoulder of a dark highway with rain starting to fall? It means your wait time, the quality of the service, and the professionalism of the driver are all dependent on the local contractor that happens to be on call. And the reviews here are a true mixed bag. For every member who raves about a quick, 20-minute response, there's another who tells a horror story of waiting 3 hours for a tow truck that never shows up, or being told the nearest available provider is 70 miles away. This is especially true in rural areas. If you break down on a busy interstate near a major city, you'll probably have a decent experience. But if you're on a back road in Montana or a desolate stretch of highway in West Texas, that nationwide network can suddenly feel very, very small. Then there are the limits. USAA's basic roadside assistance often includes a towing limit, for example, up to 15 miles or to the nearest qualified repair shop. 15 miles sounds reasonable, until you realize the specialized dealership that works on your car is 25 miles away. Anything over that limit, you're paying for out-of-pocket, and tow mileage rates can be brutal. So is it worth it? Let's compare it to the gold standard AAA. A basic AAA membership might cost you around $60 to $70 a year. USAA's roadside assistance is often cheaper, maybe $20 to $30 a year added to your policy. But with AAA, you often get more robust services, longer towing distances, and a dedicated network that is frankly their entire business model. They live and die by their roadside service. For USAA, it's an add-on. For a few dollars, USAA's service is better than nothing. But if you do a lot of driving, especially in remote areas, relying on it as your primary safety net might be a gamble. It's convenient, but it may not be the most reliable. Okay, so your car has been towed. It's in the shop and the mechanic gives you the grim news. It's gonna be at least a week. Now you're facing a new problem. How do you get to work? How do you pick up the kids? This is where our second major benefit, rental reimbursement, is supposed to sweep in and save the day. Again, for a small extra premium, USAA will cover the cost of a rental car while yours is being repaired after a covered accident. Sounds great, but this is another area where the devil is in the details, specifically the dollar amount. USAA typically offers a few tiers of coverage, like $30, $40, or $50 per day, up to a maximum of 30 days. Let me ask you a question. When was the last time you rented a car for $40 a day? Not the advertised base rate, but the actual out-the-door price after all the taxes, surcharges, and mystery fees are tacked on. If you drive a small sedan, maybe you can find something close to that. But what if you drive an SUV to haul your family around? Or a pickup truck for your work? That $40 a day isn't going to get you a comparable vehicle. You'll be squeezing your family of 5 into a compact car, or paying a significant amount out of pocket each day, just to get a vehicle that actually fits your needs. A quick search on any major rental site shows that a standard SUV can easily cost $70, $80, even $100 a day or more, especially if you need it on short notice. So that $40 a day coverage from USAA suddenly looks less like a complete solution and more like a discount coupon. It's a buffer, not a blank check. It reduces the financial sting, but it rarely eliminates it. The question you have to ask yourself is this: is paying, say, an extra $10 a month for this coverage worth it? Over a year, that's $120. Over 5 years, that's $600 you've paid for a benefit you may never use. Alternatively, you could put that $600 into a dedicated car emergency fund. For some, the peace of mind of having the coverage is worth every penny. For others, who are more financially disciplined, self-insuring for that rental car might make more sense. It's not a bad product, but you have to be realistic about what it actually covers versus what a rental car truly costs in 2024. Now for the holy grail of insurance perks: accident forgiveness. This is the one that sounds almost too good to be true. The promise is simple and incredibly powerful. If you cause an accident, we'll forgive you. Your rates won't go up. It's a get-out-of-jail-free card for your first major mistake. In an industry where a single at-fault claim can cause your premiums to skyrocket by 30, 40, or even 50% for years, this benefit seems priceless. But here's the catch, and it's a big one. It's not for everyone. USAA, like most companies that offer it, has some very strict eligibility requirements. Typically, you need to have been a USAA auto insurance customer for a set number of years, often 5 or 6 years, with a completely clean driving record during that entire time. So, if you're a new member, you can forget about it. If you had a fender bender 3 years ago, you're not eligible. This isn't a benefit they just hand out. It's a loyalty reward for their safest, most long-standing, and most profitable customers. Let's say you do qualify. You've been with them for 6 years accident-free, and you're paying the extra premium for this forgiveness. You back into a pole in a parking lot, causing a few $1,000s in damage. You file a claim, USAA pays it, and thanks to accident forgiveness, your premium doesn't increase at your next renewal. Fantastic, right? Well, mostly. Here's what's happening behind the curtain. First, that forgiveness is a one-time deal. You've used your card. The next at-fault accident is going to count, and it's going to hurt. Second, and this is the part most people miss, forgiveness only applies to USAA's rating system. The accident itself doesn't disappear. It still goes on your permanent driving record, specifically your CLUE report, which is a database of all your claims that nearly every insurer in the country uses. So what does that mean? It means you are now anchored to USAA. If you decide to shop around for new insurance a year later, Geico, Progressive, and State Farm will all see that at-fault accident on your record, and they will quote you a much higher rate because of it. USAA forgave you, but the rest of the industry has not. Accident forgiveness can be a powerful tool for retaining customers, sometimes by making it financially painful for them to leave. So, when we peel it all back, these popular add-on benefits are a mixed bag. They are not a scam, but their real-world value is often more limited than the marketing suggests. Roadside assistance is convenient, but can be less reliable than a dedicated service. Rental reimbursement helps, but it's unlikely to cover the full cost of a comparable vehicle. And accident forgiveness is a valuable but exclusive perk that can create a form of golden handcuffs, tying you to one provider. Understanding these nuances is key. But let's be honest, all of this, the discounts, the special features, the add-ons, it's all just the opening act. The main event, the single most important moment in your relationship with any insurance company, is when you have to file a major claim. It's the moment of truth. When your car is totaled, when there are injuries, when the stakes are incredibly high. Does USAA's legendary customer service actually show up? Or is that when you discover the friendly voice on the phone is replaced by a calculated, bureaucratic process designed to minimize their payout? This is where the rubber truly meets the road. Let's be brutally honest. For 99.9% of the time you have car insurance, you're just paying for a piece of paper and a promise. You're paying for peace of mind. The actual product, the thing you are really buying, only gets delivered in one of the worst moments of your life. After the crunch of metal, the shattering of glass, and the sickening jolt. That's the moment of truth. That's when you find out if the premiums you've been faithfully paying for years were an investment in your security, or just a sunk cost. So let's walk through it. What does a USAA claim actually look like? In the best case scenario, it's a thing of beauty. It's the experience that built the legend. Imagine this, you're in a parking lot, you back into a low pole you didn't see. It's embarrassing, but nobody's hurt. The back bumper is dented and scraped. You take a deep breath, pull out your phone and open the USAA app. The app is slick, it's intuitive. It guides you through taking photos from specific angles. You upload them right there. Before you've even driven home, you get a notification. A preliminary estimate is ready. Seems fair. The app gives you a list of USAA-approved, highly rated repair shops nearby, or it gives you the option to choose your own. You can even opt for a direct deposit of the estimated amount, minus your deductible, and handle the repairs yourself if you're handy. A day or two later, you get a call from a real human claims representative. They're polite, empathetic. They ask if you're okay, confirm the details, and explain the next steps clearly. They make you feel taken care of. This is the USAA that members rave about. It's efficient, it's technologically advanced, and it has a human touch. For simple, straightforward claims like this, which, to be fair, represent the vast majority of claims, USAA is an absolute powerhouse. They have honed this process to perfection. But what happens when it's not a simple fender bender in a parking lot? What happens when it's a multi-car pileup on the interstate at rush hour? What happens when your car is declared a total loss? What happens when there's a dispute over who was at fault? This is where the glowing reviews often collide with the nightmare stories you see posted in forums and on the Better Business Bureau website. This is where the promise is truly tested. Let's dissect the common points of failure, the friction points where the process can break down. The first is what I call the adjuster shuffle. In a complex claim, you might not have one single point of contact. You might first talk to a claims intake specialist. Then you're assigned a field adjuster who inspects the vehicle. Then, if there are injuries, a completely different bodily injury adjuster gets involved. And if the car is totaled, a total loss specialist takes over. Every time you're handed off, there's a risk of details getting lost in translation. You find yourself retelling the same traumatic story over and over again to different people who are all looking at your case through the narrow lens of their specific department. That feeling of being personally cared for can quickly evaporate, replaced by the cold realization that you are a case number moving through a very large, very complex corporate machine. The second and perhaps most contentious issue is the valuation of a totaled vehicle. This is a massive source of conflict. Let's say your beloved 5-year-old SUV, which you kept in pristine condition, is totaled. You've seen similar models on dealership lots selling for $25,000. You feel that's a fair replacement value. Then the offer from the insurance company comes in, $19,000. Feels like a punch to the gut. You feel insulted, lowballed. So what's going on here? Insurance companies, and USAA is no exception, pay actual cash value, or ACV. This is not the same as retail replacement cost. ACV is what your car was worth the second before the crash. They use third-party companies that analyze recent sales data of comparable vehicles in your area to generate a value. But here's the rub. That report can be influenced by all sorts of things. Maybe they're comparing your pristine, top-of-the-line trim model to a fleet-owned base model that was sold at auction. Maybe they're not adequately accounting for recent maintenance or new tires you just put on. The first offer is almost always a starting point for a negotiation. But for a member who has been told for years that USAA is a family that has their back, receiving an offer that feels thousands of dollars short feels like a betrayal. It forces you, the victim of an accident, to become an adversary, to fight and claw for a fair value at a time when you are at your most vulnerable. This leads to the third major area of complaint, dealing with USAA as a third-party claimant. This is critical to understand. The vast majority of one-star, fire and brimstone reviews you read about USAA are not from its own members. They are from people who were hit by a USAA member. And in that scenario, USAA's role completely flips. Their primary legal and fiduciary duty is to their member, the person who pays them premiums. Their goal is to defend their member and resolve the claim by paying out the least amount of money legally possible. So if a USAA driver runs a red light and plows into you, You are not their customer. You are a liability. You will be dealing with a company whose financial incentive is to minimize your claim. They might delay, they might dispute the extent of your injuries, they might offer a quick but low settlement hoping you'll take it and go away. This is how all insurance companies operate. But it's a stark contrast to the warm, member-focused marketing USAA projects. It creates a massive disconnect and is the source of so much of their negative reputation online. Finally, there's the issue of repairs. USAA, like other insurers, has a network of preferred repair shops. They'll call it the STARS program or something similar. Using one of these shops has benefits. The process is streamlined, the payment is handled directly, and USAA typically guarantees the repairs for as long as you own the car. Sounds great, right? But there's a potential downside. These shops get a high volume of business from USAA, which can give the insurance company leverage. There are widespread concerns in the auto body industry that insurers pressure shops to cut costs by using aftermarket or salvaged parts instead of original manufacturer, OEM, parts, or by using faster, but potentially lower quality, repair methods. You always have the legal right to take your car to the shop of your choice, but if you do, the process can be slower. You might have to pay out of pocket and wait for reimbursement, and the insurer will only pay what they deem a reasonable cost, which can lead to disputes between the shop and the insurer with you stuck in the middle. So how do we reconcile these two completely different realities? The hyper-efficient, top-rated service and the bureaucratic, low-balling nightmare? The truth is, both are real. It comes down to complexity and statistics. For the tens of thousands of simple claims each year, USAA's system works brilliantly. This is why they consistently get top marks in large-scale customer satisfaction surveys from places like J.D. Power. These surveys are based on averages, and on average, members have a great experience. But when things get complicated, when big money is on the line, when fault is unclear, the system's cracks begin to show. The processes that are designed to be efficient can feel cold and impersonal. The financial protocols designed to protect the company's assets can feel adversarial to the member. A small percentage of a very large number is still a lot of people. So while only a fraction of members may have a terrible claims experience, their stories are amplified because of the emotional and financial devastation involved. The key takeaway here isn't that USAA is secretly a bad company. It's that they are an insurance company. A very, very good one for the most part, but still a massive financial institution with a bottom line. The legendary service is most likely to show up when your needs and their business processes are perfectly aligned. When they diverge, you need to be prepared to advocate for yourself. That means documenting everything, taking your own photos, getting your own repair estimates, researching your car's value before you even talk to the adjuster, and never, ever accepting the first offer on a total loss without doing your homework. We've seen the best and the worst of the claims process, the moment of truth. But all of this service, both the good and the potentially bad, comes at a price. What does it actually cost to be a USAA member? Are their auto insurance premiums competitive? Or are you paying an extra brand tax for that reputation? How do their rates stack up against the budget giants like Geico and Progressive, or the established players like State Farm? In the next part, we are going to pull back the curtain on USAA's pricing. We'll break down the numbers, look at the factors that drive your premium up or down, and reveal whether that legendary service comes at a legendary price. The answer is more complex than you think. So let's get right to the question that's probably on everyone's mind. Is USAA cheap? The simple answer is, it's complicated. The more accurate answer is that for many of their members, they are often one of the most competitively priced options on the market, sometimes by a significant margin. But they are not always the cheapest for everyone. To understand why, you have to understand USAA's fundamental business model. Unlike companies that have to cast a wide net and insure everyone from a 16-year-old with a lead foot to a retiree who drives twice a week, USAA has a pre-screened, exclusive membership pool. The military community. From an insurance perspective, and this is purely about statistics and risk assessment, this group is often viewed as a lower risk. The data tends to show that military personnel and their families, as a demographic, are more likely to be responsible, disciplined, and financially stable. This isn't a character judgment on anyone else. It's a cold, hard actuarial calculation. A lower risk pool means fewer claims paid out per customer. Fewer payouts mean the company can afford to charge lower premiums and still remain profitable. That is the secret sauce. That is the core reason why USAA can often beat the prices of its competitors. They aren't insuring the general public. They are insuring a specific, statistically safer slice of it. But that's the 10,000-foot view. Your personal rate isn't based on an average. It's based on you. So let's drill down into the 5 critical factors that will make or break your USAA quote. First, and most obviously, is your driving record. This is the bedrock of any auto insurance premium. Imagine 2 35-year-old officers, both living on the same base, both driving the same Ford F-150. Officer Miller has a spotless record. For the last 5 years, not a single ticket, not a single accident. He is, in the eyes of USAA, a predictable and safe bet. His premium will reflect that. It will be clean, low, and straightforward. Now meet Officer Davis. In the last 3 years, he got tagged for going 20 over the speed limit on the interstate, and he had one at-fault fender bender in the base parking lot. Even though the damage was minor, it's on his record. To USAA, he now represents a higher statistical probability of a future claim. His premium could easily be 30, 40, or even 50% higher than Officer Miller's. It's the same person, same truck, same job, but a different history creates a wildly different price. Your past driving behavior is the #1 predictor of your future insurance cost. Second is a factor people vastly underestimate: your location. Where you park your car at night is almost as important as how you drive it. Let's take our clean record driver, Officer Miller, and his F-150. If he's stationed at F.E. Warren Air Force Base in Cheyenne, Wyoming, his insurance will be incredibly affordable. Why? Low traffic density, fewer accidents per capita, lower rates of vehicle theft, and lower labor costs for repairs. Now let's say Officer Miller gets a new assignment at the Pentagon and moves to a suburb just outside Washington, D.C. Same driver, same truck, same perfect record. His premium will skyrocket. It's not a penalty. It's a reflection of the new environment. He's now parking his truck in an area with some of the worst traffic in the nation. The risk of accidents, theft, and vandalism has gone up exponentially. The cost to repair his truck at a DC area body shop is also much higher than in Wyoming. Your zip code tells an insurer a massive story about the risks your vehicle faces every single day, even when it's just sitting there. Third, the vehicle itself. This goes deeper than just a sports car costs more to insure than a sedan. USAA, like all insurers, looks at a few key things. What's the vehicle's safety record? A car that's an IIHS Top Safety Pick Plus, packed with features like automatic emergency braking and lane keep assist, is statistically less likely to be in a severe accident. That can lower your premium. But they also look at the other side of the coin: repair costs. Consider 2 popular vehicles, a Honda CR-V and a Tesla Model Y. They're both safe, modern SUVs. But if you get into a fender bender, the CR-V is relatively simple to fix. Parts are everywhere, and nearly any body shop can do the work. The Tesla, on the other hand, is packed with sensors, cameras, and specialized aluminum bodywork. It often requires a certified, more expensive technician and parts that can be on backorder. So, even if the purchase price is similar, the Tesla will almost always cost more to insure because the potential cost of a future claim is much higher. Fourth is the most controversial and misunderstood factor: your credit-based insurance score. Let's be very clear. This is not your FICO score. It's a separate score that insurance companies use, and it's an industry-wide practice, not unique to USAA. Decades of industry data have shown a strong correlation between how a person manages their financial responsibilities and how responsibly they tend to drive. People who pay their bills on time and manage debt well are, statistically, less likely to file claims. It's a correlation that holds up across massive data sets. So, if you have a strong history of financial responsibility, USAA sees you as a lower risk and will give you a better rate. If your credit history is shaky, your rates will be higher. It's a tough pill to swallow for some, but it's a massive component of modern insurance pricing. Finally, the fifth factor is the one you have the most control over: your coverage choices. Think of your policy as a fortress you're building around your finances. The state-mandated liability coverage? That's the bare minimum foundation. But then you start adding walls. Collision coverage, which pays to fix your car if you hit something. Comprehensive coverage, which pays for things like theft, hail, or a deer strike. These are the things that truly protect your vehicle. Then you have your deductible. This is the amount of money you agree to pay out of pocket before the insurance company pays a dime. If you choose a low deductible, say $250, you're asking USAA to take on more risk. Your premium will be higher. If you're confident you can handle a bigger one-time expense, you can raise your deductible to $1,000 or even $2,000. This tells USAA you're willing to share more of the risk, and they will reward you with a significantly lower premium. It's a constant balancing act between your monthly payment and your potential out-of-pocket cost after an accident. Now, beyond these core factors, USAA's real power comes from its massive list of available discounts. This is where you can take a good quote and make it great. They have the standard stuff, of course. The multi-policy discount or bundling is huge. If you have your auto insurance with USAA, adding renters or homeowners insurance can often slash 10 to 20% off your bill. But they go much deeper. They have a good student discount for young drivers who maintain AB average or better. They have a driver training discount for completing an approved defensive driving course. For military members, the discounts get even better. The most famous is their vehicle storage discount. If you're deployed overseas or away for training for more than 30 days and you garage your car, you can get a discount of up to 60%. That's an incredible benefit that almost no other mainstream insurer offers. And then there's the big one, SafePilot. This is USAA's telematics program. You download an app on your phone and it monitors your driving habits, things like hard braking, harsh acceleration, and most importantly, anytime you're using your phone while driving. Yes, it feels a little like Big Brother is riding shotgun, but the potential reward is a discount of up to 30%. For a safe driver, that can translate to hundreds of dollars in savings every year. It's a direct trade-off. A little bit of your privacy for a potentially massive discount. So when you put it all together, the lower risk membership pool, the core rating factors, and a deep stack of meaningful discounts, you can see why USAA is so often the price leader for its members. However, it's not a guarantee. If you have multiple accidents, a low insurance score, and live in a high-cost urban area, USAA might still be more expensive than a company that specializes in high-risk drivers. The key is that for the target USAA member, someone with a decent record, good financial standing, and a willingness to bundle policies, their pricing is exceptionally tough to beat. But a low price and a long list of discounts are meaningless if the company vanishes when you actually need them. When the worst happens, a serious accident, a stolen car, a tree falling on your hood, how does USAA actually perform? What is the claims process really like? That's where the rubber truly meets the road, and it's what we're diving into next. It's 3 p.m. on a Tuesday. You're stopped at a red light, humming along to the radio, thinking about what to make for dinner. Suddenly, a jarring slam from behind. Your head snaps back, your heart leaps into your throat, and the sound of crunching metal and shattering glass fills the air. You've just been rear-ended. In that moment of shock and adrenaline, 100 thoughts race through your mind. Is everyone okay? How bad is the damage? And the big one, how much of a nightmare is this going to be to deal with? This is the moment of truth for any insurance company. All the premiums you've paid, all the promises they've made on their commercials, it all comes down to this. So, with USAA, what happens first? For most members, the first step is pulling out their phone and opening the USAA app. And right here, in this initial high-stress moment, is one of USAA's biggest strengths. Their digital claims process is widely regarded as one of the smoothest in the industry. The app will guide you step by step. It prompts you for the crucial information: the location, photos of the damage to both cars, the other driver's information, and a brief description of what happened. You can do all of this right there on the side of the road. It's intuitive, it's fast, and it gives you a sense of control when you feel like you have none. Within minutes, you can have a claim number and a confirmation that the process has started. Alternatively, you can call their claims number. And this is another area where USAA has historically built its sterling reputation. The representatives who handle these first notice of loss calls are generally calm, empathetic, and efficient. They know you're shaken up, and their job is to get the ball rolling quickly. They'll get the core details and let you know what to expect next. What happens next is the assignment of a claims adjuster. This is the single most important person in your entire claims journey. They are your point of contact, the one who evaluates the damage, explains your coverages, and ultimately authorizes the payment. And this is where the legendary USAA experience can either be fully realized or start to show some cracks. In a perfect world, you'll get a call from your dedicated USAA adjuster within 24 to 48 hours. They'll introduce themselves, confirm the details of the accident, and explain the next steps with clarity. They'll ask if you need a rental car, and if you have that coverage, get one set up for you, often with direct billing through a partner like Enterprise or Hertz. This is the white glove service that longtime members rave about. You feel taken care of. You have a name, a direct line, and a sense that a professional is handling your problem. However, let's be honest about the modern insurance landscape. In recent years, especially during periods of high claim volume from major storms or disasters, some members have reported a different experience. They report delays in that first contact. They find themselves leaving voicemails that aren't returned for a day or two. And sometimes the adjuster assigned isn't a direct USAA employee, but a third-party independent adjuster contracted to handle overflow. While these independent adjusters are professionals, they may not be as steeped in the USAA way of doing things, and the experience can feel a bit more transactional and less personal. This is the number one variable that can color your entire claims process: the quality and responsiveness of your specific adjuster. Once you're in contact with your adjuster, the next phase is damage assessment. How bad is it and what will it cost to fix? For minor to moderate damage, USAA will likely ask you to use their photo-based estimating tool, PhotoEst. You'll be prompted through the app to take a series of specific pictures of the damaged areas. Their system, using AI and data from millions of previous claims, generates a preliminary estimate for repairs, sometimes in just a few hours. This is incredibly convenient. It can mean you don't have to take time off work to go to a body shop for an initial estimate. But here's a critical piece of advice. That initial photo estimate is just that, an estimate. It's a starting point. Modern cars are complex. What looks like a simple cracked bumper on the outside can be hiding a bent impact bar, damaged sensors for your cruise control, and broken plastic clips underneath. The AI can't see that. So, while the photo estimate is a great first step, the real final cost will be determined once a body shop actually takes the car apart. This brings us to the repair itself. USAA will likely encourage you to use one of their STARs. That stands for Service Through Approved Repair Shops, network facilities. There are significant advantages to doing this. These are shops that USAA has vetted. The shop will work directly with USAA on the payment, so you're typically only responsible for your deductible. You don't have to play middleman, shuttling checks and paperwork back and forth. Most importantly, USAA guarantees the workmanship of these repairs for as long as you own the car. That's a powerful guarantee. If the paint starts peeling a year later, USAA will make it right. But there's a flip side, and it's something you need to be aware of. You have the legal right in almost every state to have your car repaired at any shop you choose. You do not have to use a USAA preferred shop. Why might you choose your own? Perhaps you have a long-standing relationship with a local family-owned body shop you trust. Or maybe you're very particular about your vehicle, and you want to ensure they only use original equipment manufacturer, or OEM, parts, not aftermarket or salvaged parts. While many STARS network shops do excellent work, their agreement with USAA can sometimes involve using non-OEM parts to control costs. If you insist on OEM parts, especially on an older vehicle, it can become a point of negotiation. The key takeaway is this: the choice of shop is yours. Weigh the convenience and guarantee of the STARS network against the control and specific requests you can make with an independent shop. Now let's talk about the worst-case scenario. Your car is declared a total loss. This is a devastating moment. This means the cost to repair your vehicle exceeds a certain percentage of its actual cash value, or ACV. This is where the process can get emotional. Your adjuster will inform you of the decision, and then USAA will prepare a settlement offer. How do they figure out what your car was worth 1 second before the accident? They use a third-party valuation service that scours the local market for recent sales of comparable vehicles. Same make, model, year, similar mileage, and options. They'll present you with a detailed report showing these comps. Your job is to review that report with a fine-toothed comb. Did they get the trim level right? Did they account for the premium sound system you had? Did they miss the brand new set of tires you just put on last month? You can and should do your own research. Look up what similar cars are actually selling for on sites like AutoTrader or Cars.com in your area. If you find evidence that their valuation is too low, you can present that to your adjuster and negotiate. In most cases, if your evidence is solid, they will adjust the offer. They aren't trying to lowball you, but their initial data might be incomplete. Once you agree on a value, they will pay you that amount minus your deductible, and you'll sign the title over to them. The process is generally straightforward, but it requires you to be your own advocate. So when you pull it all together, the initial filing, the adjuster interaction, the damage assessment, the repairs, and the final payout, what's the verdict on the USAA claims experience? Overwhelmingly, it remains one of the best in the business. J.D. Power consistently ranks them at or near the very top for claims satisfaction. Their process is streamlined by technology, Their people are generally well-trained and empathetic, and their network guarantees provide real peace of mind. But it's not infallible. The experience is not as universally perfect as it might have been 20 years ago. The sheer growth of the company means you might encounter delays, or an adjuster who is simply overworked. The key is understanding the process, knowing your rights, like your right to choose a repair shop, and being prepared to advocate for yourself, especially when it comes to the valuation of a total loss. The legendary service is absolutely still there, but in the modern era, it sometimes requires a bit more partnership from you, the member, to ensure you get the absolute best outcome. So let's talk about what that partnership looks like in the 21st century. It primarily lives inside your phone on the USAA mobile app. For years, USAA has been a pioneer in direct-to-consumer insurance, meaning they don't have local agents in every town like State Farm or Allstate. Their office is their website and, more importantly, their app. And honestly, for the most part, it's a fantastic piece of technology. It's your command center. You can pull up your insurance ID cards in 2 taps, which is a lifesaver if you get pulled over and realize you left the paper copy in your other car. You can pay your bill, change your coverages, add a new vehicle, or get a quote for a different policy. Filing a claim is also remarkably streamlined. You can start the entire process right from the app, upload photos of the damage from the scene of the accident, and get the ball rolling before the tow truck even arrives. This is where that partnership really begins. By providing clear, immediate information through the app, you are feeding the system what it needs to help you faster. For 90% of your interactions with USAA, the app is going to be your best friend. It's fast, it's efficient, and it puts a tremendous amount of control right in your hands. But in the spirit of an honest overview, it's not perfect. Sometimes the user interface can feel a little dated or clunky. You might find a specific document or feature is buried a few menus deep, which can be frustrating. And for a complex claim, say one involving multiple parties or a serious injury, the app can start to feel like a wall between you and a human being who can give you nuanced answers. It's brilliant for transactional tasks, but it can't replace a detailed conversation with an experienced adjuster when things get complicated. That's when you have to pick up the phone, and as we discussed, be prepared to advocate for yourself. Now, beyond the digital experience, let's get into the meat of what makes USAA's auto policy truly different. These are the unique features and perks that you often won't find, or won't find structured in the same way, at other major carriers. First up is the big one, accident forgiveness. This is a huge selling point. We all have that fear that one small mistake, one moment of distraction, is going to cause our insurance rates to skyrocket for the next 3 years. USAA's accident forgiveness is designed to alleviate that fear. Here's how it works. For many members, after you've been with USAA with a clean driving record for 5 consecutive years, they will forgive your first at-fault accident. That means your premium won't be raised as a result of that specific incident. This is an incredible loyalty perk. It's USAA's way of saying, hey, you've been a safe, responsible member for half a decade. We get it, things happen. We've got your back on this one. Now, there are some state-by-state variations in eligibility requirements, but for most members, this is a standard earned benefit. It's not an expensive add-on you have to pay extra for every month. It's a reward for loyalty and safe driving, and it can literally save you thousands of dollars over the life of your policy. Next, let's talk about a feature that is criminally underrated and often misunderstood: car replacement assistance, or CRA. This is not the same as new car replacement, which some other companies offer and typically only applies to brand new cars in their first year or 2. Car replacement assistance is something different, and in my opinion, far more valuable for the average driver. If you have this coverage and your car is declared a total loss, USAA will give you the actual cash value of your vehicle, plus an additional 20% of that value. Let me say that again. They pay you what your car was worth, and then they add another 20% on top of that. This is a game changer. Let's go back to our total loss scenario. Say your 2018 Honda Accord is totaled, and its fair market value, the actual cash value, is determined to be $20,000. If you don't have CRA, you get a check for $20,000. But finding an identical 2018 Honda Accord in the same condition, and paying for tax, title, and license fees, is probably going to cost you more than $20,000. You're left with a gap. But with car replacement assistance, USAA would give you the $20,000 plus 20% of that amount, which is another $4,000. You get a check for $24,000. That extra $4,000 is specifically designed to bridge that gap. to cover the taxes, the fees, and the market fluctuations that make it so hard to replace a car without digging into your own pocket. It is one of the single best optional coverages in the entire insurance industry, and it directly addresses the biggest pain point in any total loss claim. Of course, they also offer the more standard, but still essential, optional coverages like rental reimbursement and roadside assistance. Rental reimbursement is a must-have. For a few extra dollars a month, it ensures that if your car is in the shop after a covered claim, you're not stuck without transportation. USAA offers different levels like $30, $40, or $50 a day, up to a certain maximum. Given that the average daily rental car rate can easily exceed $50, and repairs can take weeks, this coverage pays for itself the very first time you use it. Skipping it is one of the most common and most regrettable ways people try to save money on their policy. But the final, and perhaps most unique, financial aspect of being a USAA member has nothing to do with a claim. It's called the subscriber's account. This is where things get really interesting because USAA isn't a typical corporation. It's not a publicly traded company like Progressive, with shareholders on Wall Street to answer to. It's technically a reciprocal inter-insurance exchange. That's a fancy way of saying it's owned by its members. You aren't just a customer. You are, in a very real sense, a part owner of the company. Because of this structure, USAA's financial success is shared with its members. When the company does well, meaning it takes in more in premiums than it pays out in claims and operating expenses, it returns a portion of that surplus back to the membership. This happens in two ways. First, and most famously, is the annual distribution or dividend. Depending on the company's performance, members may receive a check or a credit to their account at the end of the year. It's a tangible reward for the company's collective good performance. The second and more complex part is the money allocated to your subscriber's account. This is a separate account where USAA sets aside funds on your behalf, based on your premiums and other factors. This money is essentially part of the company's capital reserves, required by regulators to ensure USAA can pay all its future claims, even in a catastrophe. You don't get this money every year. It's held by USAA. But when you eventually end your relationship with USAA after many years of membership, the funds in that account are typically paid out to you. Think of it as a long-term savings or loyalty account that you don't even have to think about. This member-owned structure is the philosophical core of USAA. It means the company's primary objective isn't to maximize profit for external shareholders, but to maintain financial strength and provide value back to its members. The annual distribution and the subscriber's account are the financial proof of that philosophy. It creates a powerful alignment of interests. You, as a member, want fewer claims and lower costs because it means a better chance at getting a dividend. And USAA wants the same thing because it ensures their financial stability and ability to serve the membership. It's a virtuous cycle that you simply do not find at a standard, shareholder-owned insurance company. So you have this ecosystem of benefits. A powerful app that puts you in control, unique policy perks like accident forgiveness and car replacement assistance that provide a massive safety net, and a corporate structure that literally pays you back for your loyalty. It's an incredibly compelling package. But all of this value begs the most important question for many people, the one that often determines the final decision: what does it all cost? Are you paying a premium for these premium features? Or can USAA actually save you money? The short answer for a huge number of people is a resounding yes. But the long answer, well, the long answer is the one that actually matters, because in the world of auto insurance, average cost is one of the most misleading phrases you'll ever hear. No one pays the average price. You pay your price. And your price is a complex cocktail of data points that paints a picture of you as a driver. So, before we can even talk about whether USAA is cheap, we have to understand what goes into that final number on your quote. Think of it like a puzzle. The insurance company is trying to predict the future. Specifically, the likelihood that you'll cost them money by filing a claim. Every piece of information they have about you is a piece of that puzzle. First, there's you, the driver. Your age is a massive factor. A 21-year-old driver is statistically a much higher risk than a 51-year-old driver with decades of experience. Your driving record is the next huge piece. Got a clean slate? Fantastic. Got a speeding ticket from last year or an at-fault accident from 3 years ago? Each of those adds a significant cost to your premium. Even your marital status can play a role, as data suggests married individuals tend to file fewer claims. Then there's your location. And I don't just mean the state you live in, though that's a big part of it. Rates in Michigan or Florida are notoriously higher than rates in Ohio or Maine due to different state regulations, weather patterns, and litigation costs. But it gets even more granular. They look at your zip code. Do you live in a dense urban area with high rates of theft and accidents, or a quiet rural suburb? They can even factor in the crime and traffic data for your specific neighborhood. Next up is your vehicle. A brand new high-performance sports car is going to cost a fortune to insure compared to a 10-year-old reliable sedan. Why? Because it's more expensive to repair or replace, it's a bigger target for thieves, and frankly, it's more likely to be driven at high speeds. The safety features on your car matter too. Things like anti-lock brakes, airbags, and anti-theft systems can all chip away at your premium. And finally, there are the choices you make. How much coverage do you want? If you opt for the bare minimum state liability limits, your premium will be lower than if you choose robust protection that covers you, your passengers, and your vehicle in almost any scenario. What deductible are you willing to pay? A higher deductible, like $1,000, means you're taking on more risk yourself, so the insurance company rewards you with a lower premium. A lower deductible, say $250, means they're on the hook for more, so your premium goes up. And in most states, your credit-based insurance score plays a role, as studies have shown a correlation between credit history and the likelihood of filing a claim. So, with all those variables in play, where does USAA typically land? When you look at study after study from independent analysts like J.D. Power, Forbes, and NerdWallet, a clear pattern emerges. For the drivers who are eligible, USAA is almost always one of, if not the most affordable major car insurance providers in the country. They consistently beat out Geico, Progressive, State Farm, and Allstate on price for a wide range of driver profiles. How is this possible? How can they offer top-tier service and still have rock-bottom prices? Comes down to their business model. First, as we've discussed, they have a select lower-risk pool of customers. Military members and their families, as a group, have proven to be a more stable and predictable demographic, which translates to fewer and less costly claims overall. Second, USAA is a direct writer, meaning there are no agents or brokers taking a commission. They also have very few physical locations. That lower overhead gets passed directly to you, the member, in the form of lower premiums. But their competitive pricing isn't just about their business model. It's also about a deep, almost overwhelming list of available discounts. Getting the lowest possible rate with USAA is about knowing which of these discounts to stack. Let's run through the most significant ones so you know exactly what to look for. First are the driver-based discounts. If you have a young driver on your policy who's a full-time student maintaining good grades, typically AB average or higher, you can get a significant good student discount. For the adults, there's the Premier Driver Discount, also known as the Safe Driver Discount. Generally, if you maintain a clean driving record for 5 consecutive years, USAA will give you a substantial discount on your premium. This is where their telematics program, SafePilot, can also come into play, offering a discount right away just for signing up, and then a larger one based on your actual safe driving habits. You can also get a discount for completing an approved defensive driving course. Next are the policy and vehicle discounts. This is where the biggest savings are often found. The multi-policy discount or bundling is huge. If you have your auto insurance with USAA, and you add a homeowner's or renter's policy, you can save up to 10% on your bill. It's almost always worth getting a quote for both. The multi-vehicle discount is another easy one. Insuring 2 or more cars with them will naturally lower the rate for each. If you buy a new car, or at least one that's less than 3 years old, you can qualify for the new vehicle discount. But where USAA truly separates itself from the pack is with its military-specific discounts. These are designed with the unique lifestyle of a service member in mind. The most valuable one for active duty members is the vehicle storage discount. If you are deployed or have to store your car for any reason and won't be driving it, you can get a massive discount. We're talking up to 60% off your premium. This is a game changer for service members on long-term assignments. Additionally, there's a military installation discount. If you garage your vehicle on a military base, you can receive a discount of up to 15% on certain coverages. This is because bases are generally considered more secure environments with lower risks of theft and vandalism. When you start stacking these discounts, the savings become profound. Imagine a family with 2 cars, one of which is new. They bundle their homeowner's insurance. Their daughter is a good student, and the parents have had a clean driving record for 5 years. On top of that, they live on base. The combined effect of all these discounts can slash their premium by a staggering amount, making an already competitive rate almost unbeatable. So to bring it all back, USAA isn't just cheap. For many, it's the cheapest by a wide margin. The combination of a low-risk membership pool, a low-overhead business model, and an arsenal of stackable discounts creates a pricing structure that is incredibly difficult for their competitors to match. Of course, the only way to know for sure what your price will be is to get a personalized quote. But based on all the available data, the odds are very high that you will be pleasantly surprised by the number you see. So with potentially the lowest prices on the market and chart-topping customer service, it sounds like a no-brainer, right? Well, not so fast. There's one final massive piece of the puzzle we haven't discussed. The one thing that, for millions of Americans, makes all of this completely irrelevant. And that massive, unmovable piece of the puzzle is eligibility. The single greatest strength and, for many, the most frustrating aspect of USAA is its exclusivity. You don't just choose USAA. USAA has to choose you. Or more accurately, you have to qualify for membership. This isn't like Geico or Progressive where anyone with a driver's license and a credit card can get a quote. USAA is a membership-based organization founded with a very specific mission: to serve the U.S. military community and their families. If you don't have a connection to the military, then no matter how great their rates are, no matter how legendary their service is, the door is respectfully but firmly closed. So, who exactly gets the key to this exclusive club? Let's break it down because the rules are precise. First and most obviously are active duty members of the U.S. Armed Forces. Army, Navy, Air Force, Marines, Coast Guard, and now the Space Force. If you are currently serving, you are in. This also includes those in the National Guard and the Reserves. Second are veterans. But there's a critical detail here. You must have been honorably discharged. If you received any other type of discharge, you generally won't be eligible. USAA was built on a foundation of honor and service, and they hold that line strictly. Third are cadets and midshipmen at U.S. service academies or in advanced ROTC programs. They see these individuals as the future of the officer corps and welcome them into the fold early. Now, here is where it gets both more expansive and a little more complicated. Family. This is the part that trips most people up. The membership can be passed down, but only in a specific way. Spouses of current or former USAA members are eligible. This also includes widows, widowers, and former spouses who had USAA membership during their marriage. If your former spouse was a member and you were on the policy, you can typically continue your membership even after a divorce, as long as you don't let it lapse. For widows and widowers, you can join even if your deceased spouse wasn't a member, as long as they were eligible at the time of their passing and you haven't remarried. And the big one, children. Children and stepchildren of USAA members are eligible to get their own membership. This is how the legacy is passed on. If your mom or dad had USAA, you can get it. And once you have it, you can then pass it on to your own kids someday. Think of it like a family heirloom. It's passed directly from parent to child. But here's the fine print that matters. For this to work, your parent must have joined USAA before you became their child, or while you were still their dependent. More importantly, that parent has to actually be a member. Just being eligible isn't enough. Your dad can't just say, "Oh, I was in the Army, so you can join." He has to have an active or previous USAA membership himself for you to inherit that eligibility. So who is left out? A lot of people. Grandchildren cannot join based on their grandparents' service, unless their own parent became a USAA member first. Siblings of members can't join. Parents of members can't join. Cousins, aunts, uncles. None of them are eligible through a family connection that isn't a spouse or parent. This exclusivity is the entire reason USAA can operate the way it does. It wasn't a marketing decision. It's in the company's DNA. Back in 1922, a group of 25 Army officers met in San Antonio, Texas. They were having a tough time getting auto insurance because, as military officers, they were considered a high-risk group. They moved around a lot, they were seen as transient, and traditional insurance companies just didn't want their business. So, they decided to do something radical. They would insure each other. They pooled their own money and created the United Services Automobile Association, a reciprocal inter-insurance exchange. It wasn't a company designed to make profits for shareholders. It was a club designed to provide a service for its members. That fundamental structure remains today. USAA is owned by its members, the policyholders. Profits are returned to the members in the form of dividends, lower premiums, and better service. They can afford to be so customer-centric because their customers are also their owners. This model also means they have a very deep, almost statistical understanding of their risk pool. They aren't insuring the general public. They are ensuring a specific demographic with shared values, and from an actuarial standpoint, predictable behaviors. This focus allows them to price their products with a precision that other insurers, who have to account for a much wider and more chaotic pool of drivers, simply can't match. Of course, this raises the question, is that fair? In an age of inclusivity, is it right for a massive financial institution to exclude the vast majority of the population? Critics argue that it's a form of financial redlining, creating a privileged class that gets access to superior products and services based on their profession or family tree. They argue that a person's driving record and credit score should be the only factors, not who their father was or what they did for a living 20 years ago. The counterargument, and the one that has held up legally, is that USAA is not a public utility. It's a private association, a members-only club with a clear and defined charter. It's no different than a credit union for teachers or a fraternal organization for a specific trade. Their mission from day one was to serve the military community, and they've never wavered from it. To open it up to the general public would fundamentally change the nature of the company, altering its risk pool, its financial structure, and its entire culture. So after all of this, let's land the plane. Is USAA auto insurance a good fit for you? If you are eligible, if you are that service member, that veteran, that military spouse or child, the answer is an overwhelming, resounding yes. It should be the very first quote you get. It is the benchmark against which you should measure every other offer. That doesn't mean it will be the absolute cheapest option in every single scenario. A competitor might run a promotion or have a unique algorithm that gives you a freakishly low rate. But more often than not, USAA will offer an unbeatable combination of price, coverage, and world-class, top-of-the-mountain customer service that is almost impossible to find elsewhere. The peace of mind that comes from knowing you have a company that genuinely has your back is, for many, worth more than a few dollars saved per month. For the eligible, not considering USAA is a massive financial mistake. But what if you're like the majority of Americans? What if you're on the outside looking in? First, don't despair. While USAA is fantastic, it is not the only great insurance company in America. If you're looking for that same spirit of customer-first service, you do have options. Look into companies like Amica Mutual. Like USAA, Amica is a mutual company, meaning it's owned by its policyholders, and it consistently scores at or near the top of J.D. Power customer satisfaction surveys, right alongside USAA. Erie Insurance is another one that gets rave reviews for its service, though it's only available in about a dozen states. Even some of the big players like State Farm often have agents who build incredible, long-lasting relationships with their clients. The key is to define what you're looking for. If you're hunting for the absolute lowest price, a company like USAA might not have been your top choice anyway. But if you're looking for value, for a partner in your financial life that will be there when things go terribly wrong, then you can find that. You just have to do the research, read the reviews, look at the complaint ratios, talk to friends and family. Your mission is to find your USAA. In the end, choosing an auto insurance company isn't just about fulfilling a legal requirement. It's an act of trust. You're handing over your money in exchange for a promise that if the worst happens, if you're in a terrifying accident on a dark highway, a stranger on the other end of the phone will have the compassion, the competence, and the authority to make things right. USAA has proven for a century that it keeps that promise to its members. For those fortunate enough to be part of that family, it's an incredible benefit earned through service and sacrifice. For everyone else, it stands as a powerful example of what an insurance company can and should be. The goal isn't just to get into USAA. The goal is to find a company that makes you feel the way USAA makes its members feel. Valued, protected, and secure. And that's a mission worth pursuing, no matter whose name is on the insurance card in your wallet.